A stock trading chart candle, also known as a candlestick chart, is a popular charting method used by traders and investors to track the price movement of a stock over time. A candlestick chart displays the open, high, low, and closing prices of a stock for a particular time period, such as a day or a week. Each candle on a candlestick chart represents a specific time period, and the shape and color of the candle provide information about the price action of the stock during that time period. The body of the candle represents the difference between the opening and closing price, while the wicks or shadows represent the high and low prices of the stock during that time period. A bullish candle indicates that the closing price was higher than the opening price, while a bearish candle indicates that the closing price was lower than the opening price. Here's a breakdown of the different parts of a candle. Body, the thick part of the candle that represents the difference between the opening and closing price. Upper wick, shadow, the thin line above the body that represents the highest price reached during the time period. Lower wick, shadow, the thin line below the body that represents the lowest price reached during the time period. Open, the horizontal line on the left side of the body that represents the opening price. Close, the horizontal line on the right side of the body that represents the closing price. Traders use candlestick charts to identify patterns and trends in price movement, such as bullish or bearish trends, reversal patterns, and price consolidation. These patterns can provide insight into future price movements and help traders make more informed trading decisions.